Hello everyone, this is Amit here and I will take you through today's price action analysis of Bank Nifty futures. I'm using 1 minute candlestick chart and let's go through bar by bar and understand what trades were possible using the methods that I've been outlining and how to enter, where to place stop and where to book profits. All those aspects we'll look at. Okay, so here is where the yesterday's high is the dark bold blue line. Price opened above it but failed, and the price kept pushing down. Bears did control this bar one, right? It was a channel breakout failure. This line that you see is basically yesterday's channel. Uh, so it failed there. Then it failed above yesterday's high. So multiple failures here, but I did not go short below this bar because one, it is a too big bar in the context of other bars on the left side, right? And it was into the EMA support was possible, right? So I did not do anything on bar one. Bar two, you can see that it got support at the EMA and bar closed positive. So this is a breakout failure looking at bar one, but this is a breakout and then there's a pullback at the EMA, right? Breakout above yesterday's high out of this channel, right? All those things. And then there's a pullback support at the EMA. So you go long about this bar, right? So this is high is 473.30. So you go long about that bar and then entry bar is good. There's a follow through, but what you see compared with this is not a great follow through or great looking move because it's crawling up. So what do? Nothing. You just wait for the price action to unfold and follow your rules, right? So you enter here, place a 10-point stop. Why 10 point? Because I want to basically minimize the over trading that I've been doing for last 1 month or so because of this new way of trading that I have developed, right? But I want to focus on lesser number of trades. So reward is 40 points and risk is 10 points is what I'm targeting. Sometimes the reward will be lower depending upon where I'm entering in the overall context. Okay, coming back to this trade, we entered long about this bar. On bar 3 it triggered and the price kept pushing up, but it went from 73 to around 99. So 500, that was the round number where it got resisted. So people booked profits there, and you could clearly see that that is not moving up well because even after 4 bars, the distance that got covered was not much, right? After in a trade, when I enter, whether it is long or short trade, the price moves to 20 points, I move the stop to break even. So this had moved by 20 points at least, so my stop was moved to break even, which got hit during this bar, right? And so the long one was booked at the break even. We could not get anything. So once this bar came, bar 5, there is a tail. So some bears like these who sold the close of this bar, they gave up, but bearish pressure was still on. Bulls did not get a chance to scale the prices up, and you see this continuation of bear movement, but it's not that strong at this point of time, but it did continue to keep pushing prices down. What you see next is continuation. So 3 bars is a poke above, but it failed. Then there is another attempt by the bulls to support at EMA, right? We're not going short here looking at this bar 8 tail because it's not that. Yes, did bulls did scale in and try to push the prices up, right? And some of these bulls who had bought in this zone gave up here. So this is definitely a give up trade. But I'm not going short against the EMA. It's so close to EMA. I will do it only within first 2 or 3 bars or maybe 4 bars. That's it. After that, I'm really careful about going against the EMA. So that's why I did not take short below bar 7, even though you see this tail and give up by bulls. Okay. Now coming back to bar 9, this is a good support at EMA. What do you see next? They try to push the prices up but failed. This resistance zone about bar 8's high is where it is failing and kind of forming micro double top. It did go down. You see a tail here, right? So bulls are still trying to hold the ground, but it's a weak attempt. Bar close bearish, follow through, You see this bar opening at the close of this bar, so they sold the close of bar 10, right? Bar 11 managed to go below bar 10, but it did not close below EMA yet. Then you see bar 12 did manage to close below EMA, good close at the low or near the low. And what do you see next? You see that this is first attempt to go down, second attempt to go down. These two attempts were held by bulls, right? This is the first attempt, or this is the first attempt, but here in terms of the pattern, one, two attempts that were made by the bears after this spike down, right? So triangle is setting up 1 2 1 2. It's not a typical textbook pattern, but the real time patterns are not exactly matching with textbook. You need to look at the semantics of what the price is doing, the attempts, right? Number of attempts that have been done by price on either side, right? So these are two attempts by the price to go up, and this is two price attempts to go down. What do you see? Breakout of triangle. And here you need to be careful, but now the price is below EMA, convincingly closing below the EMA, break of triangle pattern. You see an attempt by the bulls to go up. Some of the bulls gave up here, and that's where you go short below this bar 12, right, which is low is 440.70, and then you keep riding this move down till, depending upon your profit booking method, right? I have mentioned reward of 40 points. At least 40 points is what I'm trying to go for. Another way to look at it is basically the measured move. There are multiple options that are there. One is this triangle pattern extension of this move to this move. So here it is 14,361, 361.62, right? So from your entry price, which is 440, it's around 80 points, right? Then there's another option, which is this move, first bar once measured move target, which is around 327.65. So it went closer, but it did not get hit, which is fine. And another way is basically looking at the trend lines and trend channel lines. They are really important way to identify support and resistance zones. The moment I see some pivot highs and pivot lows forming, I start drawing lines. Like in this case, I joined this high and this high, extended here, then I drew a parallel to that. That's where you see exactly it found a support, right? So the measured move target was there, but here it was basically people booked earlier at this trend channel line support, right? So machines or these smart traders or advanced traders are following these things. You just need to identify these lines correctly, and it's not that difficult. As I told you, it's about identifying where these pivot highs, pivot lows, or swing highs and swing lows are, and join them as many points as possible touching these lines, the better it is, right? So this parallel line that I draw here is where the support was found. Then there was a time that was spent by the price forming a triangle, another triangle, one, two, third attempt to go down failed. Price did come out of this triangle and went up. Now you could go another give up trade here and go long, but this is a counter trend trade, considering it is falling down. It's a downtrend as of today. Even though it is within yesterday's price range, one thing you need to be careful about if you're going taking counter trend trades is where you are taking it. Location is very important. It has to be as early or at the beginning of the move as possible. If you go somewhere in between, you have to identify where the resistances or supports are. In this case, this trend line that you see here is what I extended, and then I drew a parallel here. That's exactly where it failed, right? Even though if you just keep aside this price portion, you can see that when this bar formed, it was a clear uh, give up by the bears here, possibly, right? Price failed to go down, and then you see this weak attempt by the bears to scale in, and it failed. So possibly, looking at the methods that I've been following, this is a give up trade, but this is a counter trade around EMA, and it is into this resistance, right, which is a channel that is being followed at this point of time. The channel lines keep changing depending upon where the pivots or swing highs and lows are forming. So you have to keep watching the price and accordingly change the the lines, and it's not that difficult. I can, as I showed you, once this price down movement stalled and price broke out of this pattern, what I was looking at is, okay, now these lows have been formed, draw a line and draw a parallel and see if price hits in here. That's exactly where it stalled, and price kept coming down. Okay, so two trades were there. One first trade got stopped out at break even. That's fine, move on. Next trade was the short trade out of this triangle breakout pattern, and it gave you for at least 40 points, depending upon how you book the profits. It could have been 80 points, or even for that matter 100 points as well. Okay, that's it for today. I hope it helped. Thank you for watching.